who gave yesterday's 10-year auction a C-. We got 30 years today, Professor. How are you grading this one?
Wow, what a difference a day makes in 20 years. We have a 29-year, 11-month security, 30-year bonds reopened from last month. The grade, Sully, A-. The yield at $22 billion offering by the Treasury and the longest maturity that we offer, 4.331. It was a lower yield than the when issued market. Lower yield equal higher price. The government's the seller. That's a good thing. If we look at the dynamics, other than pricing, which was a major positive for the grade, 2.47 bid to cover. That's the best since June of last year. Indirects was above average at 69.3. The only thing that was a smidge light was direct bidders, and that wasn't bad. The dealers take down 13.9, smack on top of the 14% 10 auction average. This really was a very, very good auction, and it really is a bit counterintuitive. We've had a lot of very iffy auctions, and today, as yields rise and prices fall, the community investors stepped up, and maybe it was for exactly that reason, because, of course, the way prices have been moving a bit lower, maybe they took advantage of that. But in the grand scheme of things, Sully, as your guests seem to be pointing out, yields really are on the rise. And yesterday's CPI, well, all I can say is I don't know what planet so many of the analysts and economists were coming from, talking about how it really didn't seem like it was very warm. I think the notion of inflation coming down to meet their target isn't going to happen. Maybe their preferred inflation gauge, the PCE, those are much lower than CPI. We'll see how PPI and the wholesale level runs tomorrow. But no matter how you slice it, the argument that inflation is falling, well, there's a lot of debate as to how much more it needs to fall versus how much more it will fall. And both those is a timeline issue with respect to how the Fed and the committee and the dot plots are going to move next week when they have all the data in hand. Back to you, Sully.
What was the hottest thing about it? How much is housing? I mean, there's been people that have said it's all housing. There's nothing else.
You know, and yeah, the whole shelter thing in CPI, as confusing as it might be, there definitely is an issue there. And many of the experts say it's coming down, but coming down slowly in terms of shelter. What I would say is, yes, I understand that, but there's a lot of other sticky aspects within the entire process of the U.S. economy. I think the biggest plus that the Federal Reserve has with regard to looking for less inflation is the deglobalization that seems to be going on, and some of the forces like what's happening in China. They could put on a good face. They could say they're looking for 5% growth, but many of us don't believe those numbers. Those numbers are probably a little juicy, and I think that China in particular and many of the economies that aren't doing as well as the U.S. might be exporting us lower prices. But in the grand scheme of things, the biggest risk we have on inflation, in my opinion, is government policy, spending directly and indirectly, and, of course, debt and deficits are going to continue to matter.